What's up, guys, and thanks for tuning back into the Crypto Stackers YouTube channel. Guys, if you enjoyed that intro video, please do smash the like. That was a long time coming. Ordered that from a professional designer, graphics engineer, quite a while ago. It takes a long time to create stuff that high quality, and it's not cheap. Good thing I ordered it in the bull market, because if I would have ordered it in the bear market here, probably wouldn't have pulled the trigger on something quite as expensive as that one was. But it's been in the works for quite a while, months now. So if you enjoyed that video, please do drop a like, hit the share button, subscribe if you're not subscribed. Trying to bring value and increase production value as we move along here, guys. This channel's been around for well over a year now, and I appreciate the journey that we've gone on together. If you've been around for a while, thanks for sticking around. If you're new, thanks for joining. All right, guys, let's enough on the history of crypto stackers. Let's jump into some technical analysis. I do plan on adding some structure to these live streams a little bit, maybe some additional graphics. But as you can see here, I've got my trading view open. And we're just going to work our way down. So you can see I've got these different sections. I've got the legacy, Bitcoin, layer ones, right, stable coins and pegs. We're going to work our way through this, and that's just going to kind of be the structure of the stream. Before I do go into the technical analysis, let's briefly, I want to mention this, and I know you guys tune in for technical analysis, not NFT stuff, but I'm launching Disko Kittiez. Disko Kittiez is a listen to earn platform. If you want to learn more or you want to whitelist, there's a link in the description below. You can simply whitelist by going to disco.fm/custom. Create your own custom Disko Kitty. You design it. It goes into the collection. We're going to be minting very soon, very, very soon. I'm not going to give a specific date yet, but we are going to be minting very soon. It could hopefully be in a couple of days, if not 1 to 2 weeks at the latest, right? All right, DXY. Let's start with the legacy market. Let's work our way down. I want to zoom out and just look at the strength of the dollar. Strength of the dollar here. Dollar is very strong. The dollar is very strong. However, it's towards the top of a range, right? We're looking at the dollar on the weekly chart, and we can see going all the way back to the 70s, this is a resistance range, right? Resistance up here, right? Support in that range. If we move this line a little bit further over, we see that, right? Resistance, support, right? And then most recently, over the last 7 years or so, this has been a resistance range multiple times. And you can see where we're at right now. We've popped up above and deviated above this resistance level, right? But we're starting to get some resistance. And a lot of that is probably, I would imagine, I'm not a Forex expert, but I would imagine a lot of it's just Forex hedging, right? You don't want to be overexposed to dollars moving into a resistance level like this, right? So you got a lot of companies that are holding large cash balances. Do you want to be all in on dollars when there's a potential move back down to the bottom of this range, or at the very least a move down here, right? So strength of the dollar is very strong. Usually a stronger dollar is going to lead to weaker assets across the board in terms of risk assets. Now, I do want to note that even after this extremely strong move upwards, right? Let's talk about this move right here. That's a very aggressive move upwards, and I would hate to be positioning against this trend. This is a very strong trend, like it's almost parabolic or exponential in nature. It's not just a slow trickle up like we had up here. Very different move, very fast, aggressive move upwards, right? When we have these fast, aggressive moves upwards, that does not mean that you can't see a correction back down to our mid-range, or even, maybe something like this, right? So maybe a correction back down from 103 to 100. That wouldn't be too crazy here. Not at all. That wouldn't be too crazy. And I'll show you another example of a very aggressive move that we saw out of the dollar, where we did see it followed up by a correction, right? We saw this very aggressive move, right, from 95 to 98, and then we hit this resistance, and we caught a pretty steep correction, right? If I measure this correction, it's 11%. I'm going to sneeze here. Ooh. All right. So we could absolutely see a correction here, right? Just because we haven't, and you can see that the trend did continue, did move upwards, right? But, when we see a hard move up like that, we need a correction, more than likely, right? I wouldn't expect, and I know circumstances are crazy right now, and global macro, but I just wouldn't expect to see just nonstop parabolic move all the way up to like all-time highs, or not all-time highs, but previous range highs, right? Well, probably if I had to guess, if this trend continues, right, we'd probably see something like this: a correction back down to this range, a move, right, support on top of this, and then a move up to these range highs. Right, that's DXY. This is a dollar index, so it's the strength of the dollar. That's if this trend continues. We could just be range bound. We could start moving back down to the bottom of this range over the next several years. All right, let's look at crude oil. Actually, I have not taken a peek at crude oil in a minute. We're on the weekly here. You can see we are holding this trend. Let me remove this drawing. All right, let me throw on the daily easy bands on the weekly chart. Those are the ones that fit the best for oil, right? Historically, oil has been unable to hold these high overbought levels. Right now, we're very overbought. However, the reason we're very overbought is because these easy bands came down a little bit, right? Down a little bit compared to where they would be had we not had this huge pandemic crash in demand, right? So oil making everything more expensive right now. It's inflating CPI, right? Which is, the Fed's going to hike interest rates to try to battle CPI and battle inflation. Oil needs to come down. It's very laggard. From the research that I've been doing, oil prices are very, very laggard. And I have been reading some analysis that is calling for a crash in oil prices. But basically, the higher oil prices are, the more incentivized oil companies are to go in and expand production. And obviously, there's a political element in terms of these oil companies' ability to expand production. But expanding production takes time, right? So March, April of 2020, we saw this crash, production shutting down, or oil companies and some oil production companies going out of business. I believe the industry as a whole lost like $70 billion. Massive, massive losses here, right? So going from shutting down all this production to ramping it back up. Meanwhile, you have an administration that's, as opposed to the other option in the U.S., of those two administrations, the current administration is the least, or the less friendly of the two when it comes to their stance on fossil fuels. So production of oil, supply of oil, is going to take a longer time to start ramping back up. And we know that, basic supply and demand, supply goes up, right? We expect price to start coming back down, right? So it's just taking a while. I'm not going to sit here and call a top on oil, but with these easy bands, we can see it's very difficult for oil to sustain these levels, right? Obviously, there's a lot going on outside of just price action. You also have to take into account like the whole Russia-Ukraine situation. Like Germany was very oil dependent on Russia, but now they're going to start firing up some coal plants, firing up some alternative energy sources so they're less reliant on Russia. And that stuff all takes time, right? I believe, I don't know the specific date. I can't remember the specific date when Russia actually invaded Ukraine. But it's been a few months. It's been a few months, and it can take a few months to years for oil production and alternative methods of energy to ramp up in production. So I do expect to see some sort of a pullback in oil, right? Which is going to help prices of everything else come down, which is going to lead to lower gas prices, lower prices across the board, which will ultimately lead to people having more money to speculate on assets such as crypto and the S&P 500. Speaking of the S&P 500, legacy market barometer, we're looking at SPX divided by the M2 money supply. So if we adjust this for the actual amount of money in the world, or no, amount of money, US dollars in the world, not just money, but if we adjust this for M2 money stock, we see that we are in actually a place where we've seen a ton of price action before. In the 60s, 70s, right? We've passed through this zone and held it as support and resistance multiple times in the last decade or the last couple of decades. And we've actually spent about the last 5 years in this zone with one deviation due to a pandemic down here. Now, historically, adjusted for money supply, there's only been a few years where the S&P 500 has deviated above this top level, right? Above this top resistance level. Now, a lot of people may take that to mean like, hey, it's not going above this level. But that doesn't mean that it can't. This isn't just some magic line in the sand that we can't go above. We know that in a bubble, we can go above this. And we were moving kind of parabolically back in the 80s and 90s up above this level. We overshot it and then came crashing back down. So it is important to remember that we're kind of seeing a much different pattern. It is as much as as well as the S&P 500 has done in the last couple decades. They've printed a lot of money to offset when you adjust for the money supply. So instead of it being like this big parabolic move or this big exponential move where we overshoot this resistance level and then come crashing back down, we could very easily just see this trend continuation since 2008, right? Print more money goes into the S&P 500. Now we are in a period of time where we're starting to see some pullbacks, right? Inflation's increasing, Fed's increasing interest rates, printing less money, quantitative tightening, right? This has, for the most part, been quantitative easing, right? A period of quantitative easing from 2008 to now. So we could easily see this trend start doing that or however long they take to tighten, right? Or they could rip the Band-Aid off, right? Which they appear to be trying to do, right? And we could start printing money again, right? It's not out of the question to think that the government's going to just try to get inflation back down as quickly as possible and then go right back to printing money. The problem lies where if they can't get inflation down to like a target of 2 to 3%, right, before they have to start printing money again to cover debts, that's where we get into this potential spiral of inflation where they just can't get it under control before they have to start printing money again. You just keep raising interest rates, all of a sudden, the U.S. can't pay their debts because interest rates are way too high, and that's a problem, right? So keep in mind, we are in this range, right, with a couple of deviations above and below this support and resistance range. And actually, if you look at this, right, while yes, we do have a bit of a double top up here, we also have a reverse head and shoulders right here. Reverse head and shoulders. So if we start going back up to this range again, that's a reverse head and shoulders that could break out upwards. Now, I'm not going to, sit and do, pattern trading on S&P 500 adjusted for money supply, but just keep in mind, this is normally a support region. And while we've spent the last 5 years in this range, we could continue to range here for another 5 years, right? We spent like 4 years in this range over here. We spent a decade in this range back in the 60s and early 70s, right? So this isn't too out of the question, right? They just, keep playing this game of, hey, they print more money, S&P 500 goes up, inflation goes up, bring it back down, hike interest rates, right? And it just stays in this zone for a little while, right? Alternatively, this could be the top, right? And we start moving back down, right? So I know I'm not like giving you guys super insightful stuff. I'm like saying, hey, it could go up, it could go down, it could go sideways, right? But we are still in an uptrend. We are seeing a regime change in terms of quantitative easing, moving into quantitative tightening. We probably expect this to go down, right? So if I had to choose, hey, we're probably going to start going back down, maybe to these levels before bouncing back up, right? I want to give you guys insight and just keep track of what I'm looking at and how I'm looking at the macro space and let you guys draw your own conclusions. I'm not going to sit here and say like S&P 500, we're going to hold trend, we're going to continue going up. I'm not going to give you. I'll analyze this and to the best of my ability and let you guys draw conclusions. I'm not going to just tell you what's going to happen, because the truth is I don't know exactly what's going to happen, and anybody who says they know exactly what's going to happen is lying to you. All right, remove drawings. Let's get this down to the weekly. We're looking at Bitcoin here. Let's take a look at the weekly easy bands on Bitcoin. Look at the big picture, guys. Look at the big picture. And I'm not the biggest fan of Bitcoin. You guys know that. I'm not the biggest fan of Bitcoin. I actually think it's a pretty bad investment in the long term. But in the short term, long term, short term, in the short term, like over the next couple of years, I think Bitcoin's a good investment, right? Moving back up, even the next couple of months to 6 to 24 months, we're oversold, right? We're down at this green easy band level, right? We're oversold. RSI is oversold, right? Could we continue to move down? Sure, but I think this is a decent place to dollar cost average in. Over the next 5 to 20 years, I think Bitcoin is a pretty bad investment. Basically because they're going to have to print more Bitcoin. They're going to have to expand the supply above 21 million Bitcoin or else be subject to serious security issues. I've written an entire article on it. If you want to read that article, go to Bitcoin is cryptostackers.substack.com. Bitcoin is not a store of value. I've got an entire article on why Bitcoin's probably not sustainable long term. In fact, it's really not sustainable long term unless they change stuff about it. But it is number one by cryptocurrency market cap, and thus a great barometer for the rest of the market. And we can see that historically, touches of these green easy bands are incredibly good indicators of a local bottom. If not a local bottom, an entire bear market bottom, right? We very, very rarely get this oversold. Let me zoom in, right? Very, very rarely. And usually a touch of this green easy band level results in a nice little bounce. So far, we've gotten a 20% bounce. So if you just bought the green easy band level, you're up 15 to 20%, depending on where you bought. And while we could trickle down and touch this green easy band another couple times before putting in a local bottom, this is a really solid place to turn the DCA on, right? We're buying at a much lower level. Now, one of the reasons I don't love Bitcoin is like, even if Bitcoin goes to 100K, right? Even if Bitcoin goes to 100K and you're buying at 20, you're getting a 5X. You're getting a 5X, and I think Bitcoin is actually has significant risk to the downside because of how expensive it is to secure the network. It's like $7 billion a year. And all of that new Bitcoin coming onto the market, $7 billion worth or more is being sold directly onto the market to cover the cost of mining. That's why it has this huge value leak from the system that a lot of people just either don't know about or they choose to ignore for the sake of security, even though this makes it less secure in the long run over the next 5 to 20 years. So I'm not sitting here trying to FUD Bitcoin or trying to turn people against Bitcoin. Just looking at it objectively, right? But yeah, you're getting a 5X if we go to 100K. You're getting a 3X opportunity if we go back up to all-time highs. Now, stop and think for a moment. Hey, if Bitcoin goes back up to all-time highs or goes to 100K, what are quality altcoins going to do? Right? So if that's our scenario that plays out, and I'm not saying that it is, right? Maybe we get a longer bear market and then we go to 100K in post-halving in 2024, something like that. And we go to 100K in 2024, 2025. I don't want to get too bullish, even though I think it's something like that could happen, right? So say that happens. Where do you think that Solana and Avalanche and Ethereum are going to be, right? Because if Bitcoin's putting in highs at 100K, where do you think Solana is going to be, right? And from the bottom here, or even from the current price, from the current price to all-time high, you're looking at a 5.5x. Actually, that's 6.5x, I believe. 6.5x of where you're buying it right now, right? That's significantly better returns just to return to all-time highs. Now, if Bitcoin returns to all-time highs or puts in 100K, right, 100K high, Solana's probably going to be $500, right? Probably a 2x of its previous high, right? And then you're looking at a 12x on a top 10 cryptocurrency. We're not even going that low cap. Avalanche, from the bottom here to its all-time high, you're looking at a 10x, 11x, right? To put in new highs, right? Not even getting too carried away with this trend channel. Not even getting too carried away with it, just kind of parallel with our bottom channel here. Just to move back up to the top of this channel over the next couple of years, right? If we peak sometime in 2023 or 2024, kind of leading up to the next halving or even post halving, we're looking at $215 from current prices. That's a 9-10x, right? From the current low, that's a 15x. From if we go lower and test this support or even move below it, right? We're looking at like 25x opportunities, but we're only getting like a 5x out of Bitcoin, right? So yeah, a lot of people think, well, Bitcoin's a sure thing. It's going to be around. It's much less likely to fail than Solana or Avalanche. I don't know. I probably disagree because in my opinion, Solana and Avax and Ethereum are all three far more innovative than Bitcoin is. Bitcoin has like one use case, and that's store of value. And I've written like an entire article explaining why I don't think it's a very good store of value and why I do think that other cryptocurrencies, Ethereum, post-merge to be specific, is a better store of value, right? So yeah, I think my prediction is that we're going to start seeing the Bitcoin narrative over the next 5 to 15, 20 years start falling apart. Right. And innovation is going to start taking the place. It's no different than Netflix and Blockbuster. Right. Which, by the way, guys, I think Netflix is a really good example to actually take a look at in moving into what is potentially a recession. Right. Let me grab Netflix and bring it all the way up to the legacy space. Netflix absolutely crashing recently. But I want to show you guys how Netflix, a very innovative company. Let's get rid of that. I want it on a new price scale. Boom. And I want this on a logarithmic scale. All right. So Netflix was extremely innovative. Replaced Blockbuster, right? Basically destroyed Blockbuster. And if we look at this recession from 07, right, the top in 07 to the bottom of March 09, right, from just top to bottom, if you said, hey, I'm not going to invest in Netflix because we're in a recession, you missed out on, let's say, 150% gains in the midst of a recession. 150%. And that was just from top to bottom. If you actually look at it in terms of, hey, when was this recession over? Like when did we, obviously it was over sometime in here and we started moving back up, but when did we start printing new all-time highs for the S&P 500? 2013, right? So if you said, hey, I'm not going to invest in Netflix until the S&P 500 starts printing new highs, missed out on a 10x in Netflix. Right. And that's after like a pretty significant crash along the way. But you miss out on a 10x. What happened in the recession? The more innovative product, the more innovative company did well. Blockbuster failed. Netflix innovated and did well despite a recession. Right. So in a recession, I want to be in something that's innovating, not something that's stuck with one use case and not going to be changing. Now, again, I'm not trying to sit and hate on Bitcoin. I just don't think it's the most amazing investment that people make it out to be. Now, does it have an extremely strong brand? Yes, and extremely strong brand awareness, amazing brand awareness. You say the word crypto, people immediately think Bitcoin. The value of that can't be understated. That's very powerful. Now we're looking at Avax here. I've kind of gone through Bitcoin. Let's finish up on Bitcoin before we move to layer ones, right? Not a ridiculous amount to say about Bitcoin that I haven't already said. If we look at our local highs, last local high, I'm looking at 16.2K as our 1x short level, right? 16.2K as our 1x short level, right? We're starting to get resistance at this 2x short level, starting to come down, right? Now, one of two things is probably going to happen. Either we're going to find support at around 19 points, somewhere in this range. We're going to put in a lower or a higher low. We'll put in a higher low. That'll be pretty bullish. We'll start moving back upwards, hopefully break through this 2x short and start moving back up. Otherwise, we're going to go lower, right? And we could trickle up through this 2x short. I just don't think it's likely. We probably need to start putting in we need to see where buyers are going to start coming in. Are buyers going to start coming in at 20K? Or are they going to start coming in on like 19.8, 19.2K? And if they don't come in, 16.2K is the next target that I'll buy pretty aggressively. This is a target for multiple reasons. One being that it's where shorts really have to start covering. If we move here, we can see 16.4K. Let's say this is our local high. Come on, guys, I got to blow my nose. On and off allergies all spring and summer. All right. If we start going down from here at 21.8, 16.4 is our 3x short level. That coincides with 16.2, which is our 1x short level off of the last previous local high. Okay. So we have confluent support around 16.2K. That was our support level. As we were getting rejected from the previous all-time high. This is our support level in November of 2020, right? It's been a previous resistance level over here after our crash in 2017, 2018. Right? We also have some very significant risk-reward levels. Right? Actually, if I bring it all the way back down here to basically zero, that would be our current 17.7K bottom. And if we move our sensor level probably right here, I think this is how we get 16.2K, 16.4K, right? From a retest of roughly 60K or 64K, right? Again, we get confluence around the 16.4, 16.5K level. And where are we getting resistance, right? At our 21.7K level, right? So these levels appear to be fairly accurate, right? Where did we get resistance? 3-to-1 short level. Where did we get resistance? 2-to-1 short level. Resistance 1-to-1 short level. More resistance at 21.7 to 2-to-1 short level. I expect some sort of support here at around 16.4 to 16.2K. If not, the pattern that we've been seeing is a break through these levels and then a hold of resistance. So worst case is if you buy 16.4 to 16.2K, we'll crash through it and you'll be able to hold it. We'll hold it as resistance, right? And you'll be able to get out at break even. Right? So I'm buying 16.2K pretty aggressively if we drop that to that level. So that's Bitcoin. All right, let's get into some other altcoins. We'll start out with Avax and Solana, and then we'll actually go to Ethereum. All right, so Avax, very, very oversold. We look at the easy bands here, very oversold. Now I've drawn some support levels, not only just this trend channel, kind of catching our top data there, as well as previous resistance, support, right? We could easily see something like this, right? Something like that wouldn't be too crazy, right? I'm a big fan of buying long-term support, selling long-term resistance, right? So support would be down in this region around $15. If we come back to retest this, we could make a double bottom here, or we could even come back and test these lows of $9 to $10. Now, my entry point for Avax is going to be in probably the $11 region, or $11 for a couple reasons. We can go in and look at the margin pressure levels in just a second. But honestly, it doesn't take a rocket scientist to see all of the support that we have in this zone. This is where historically buyers have came in between $9 and like $12, $15, right? And we've again seen buyers come in at $14. So we know there are buyers in this region. So we want to be one of those buyers, right, to turn around and sell it to the less convicted buyers up here. Or even up here when to the buyers that are only going to be buying when the market's super, super healthy and we're in speculative and we're in a bull market, right? But we can see that very clearly. Avax oversold here below the green easy band level, below all the easy band levels. Okay, Avax in Crypto Stackers Pro. Let's go. It's number 16 by market cap. Guys, look at this. Tron Shiba Inu and Hex have larger market caps than Avalanche right now. Pretty crazy. Now, fully diluted, they may not. Not sure what the fully diluted value market caps are of those coins, but Avalanche should not be under Hex. Come on. This market's very immature, very speculative, very immature still. So there are a lot of advantages to be, or a lot of inefficiencies that we should be taking advantage of. Right? This is an inefficiency in the market. Avalanche is spectacular technology. Very undervalued right now. Could we go lower? Yes. The market's very emotional. Forced selling. We've had some bad stuff happen to Avalanche recently. All right. Let's look at our margin pressure levels off of this last local high. Looks like we came through. All right. Let's throw off these easy bands. We broke through, held support on the 2X and the 3X, held resistance on the 2X and 3X, fell below the 1X short, held it as resistance. Now we're popping through it. May hold it as support. If we find support here, we could easily start moving back up into this region, maybe find ourselves in a reverse head and shoulders pattern. We are testing some what of a downtrend. If I go and draw a trend line here, we are testing somewhat of a downtrend level right there and getting rejected a little bit. Right? So how far down are we going to go until buyers step in? Let me get rid of these easy bands so you guys can see that a little bit better, right? Not a bad place to hedge, right? Sell, right? Get back in on the other side if we pump through it, right? How far down is Avalanche going to go before buyers step in? That's what we're about to find out. How bullish are people getting? We've seeing this RSI start to maintain this oversold area a little bit. I'm not crazy about RSI, but I have been looking into the 50 RSI and a few other things that I've learned recently in the Crypto Stackers Pro chat Discord. We are seeing some divergence as well on the daily. I mean, if we just look at it, we've got an uptrend in RSI, despite our downtrend. I've already drawn the downtrend in price action. Right, so Avalanche with some divergence, going back over to Crypto Stackers Pro, finding some support around $19. Let's throw on our long levels from our previous local low over here. Looks like our 3X long held, and we've pumped through our 2X long, and our 2X long is probably going to overlap with our 1X short here. So we have this zone of support as we come back down between $17 and $18. So if you're very bullish and you think this is the bottom, right, buying between $17 and $19 is a pretty solid support zone, right? If you're not bullish and you don't want to bet on this being a bottom, you want to wait for further confirmation to the upside, wait for us to break through this trend line and then buy it as support over here, right? That would be another solid trade. Alternatively, what I am doing, I am very patient right now, as I've already bought significant amounts of Avax, Solana, and Ethereum, right? For me to pull the trigger, I want to see a move down to like this $11, $12 region. So we've got $12.50 there. If we throw on some Sunset levels, right, it would probably have to be off of this guy. You see, maybe we get a little bit of resistance in this region. We're already starting to find some resistance on the Sunset level at $22. More support at $17. So there's plenty of support here at $17 to $18. I know how I found $12. This is a different tool. It's still experimental. Remove drawings, right? If we project a bottom here, there we go. And I'm not going to get into how this tool works. It is a fib retracement tool that has been adjusted for Sunset levels within TradingView. But if we line up some of our levels here, we get some support, some projected support around $11. So I'd be buying in this zone if we make a new low. All right, that's Avalanche. Let's move to Solana. And we see I've already got this tool going on the Solana chart. And I'll give you an example of how it would have predicted this bottom, right? If we just line up these levels, these support and resistance levels, right? And we break down below there. We get a really strong bounce here at $26. Because this was the level that I was talking about. I said $30, $30 or below is where I want to buy some Solana, right? And that's where the support starts coming in, around $28 to $30. Now we did wick below $28, but $28 was really strong support. Really strong support for a bunch of different reasons that we were able to project in advance, not even in real time, in advance. So if we move over to Solana in CryptoStackers Pro, this is where I entered a Solana position, right? Just spot, just accumulation. Now, I'll be honest, I've put out videos. I was accumulating on this support. I was accumulating on this support of around $80, right? And I accumulated again below 40, and I accumulated again below 30. Right? And I'm not like embarrassed to have bought Solana at $70, $80, right? $90, right? Those are good support levels. Those were in the green accumulation region, right? I didn't buy Solana. I held off on buying Solana when everybody else was buying it above $150, $200, all the way up at $258. I held off until it came down to a more reasonable level. And yeah, we've been in a bit of a bear market, right? And I'm going to just accumulate Solana. Continue to accumulate all the way down at these big support levels, right? My average price going into the next bull market, the next cycle, or the next move up to the red easy bands is going to be significantly lower. So by being willing to buy down my position when it gets below $30, getting my average cost down to like $40, $50. Well, where are we currently right now? We're at like $40, right? So like break even. Maybe slightly under despite a ridiculous downtrend. Otherwise, right, if you're up here, right, accumulating or just buying into this hype, right, you're down like 76%. If you bought the top, you're down 85%. Whereas at least if you just accumulated the easy band levels the first time, you're only down 50% and not down 80%, right? And if you're buying down your position, you're already break even because we've had this nice pump off of this support level, right? This very nice, 40, 50% pump. That's why it's really, really important to buy these strong oversold support levels because you oftentimes get these 50 to 100% pumps. Just going back up to retest this resistance or previous support, but resistance levels in terms of Sunsa levels around $72 to $87. Off the bottom here, if this was the bottom, just a little dead cat bounce brings us 180% pump. 180% pump. Guys, you're going to be lucky to get 180% out of Bitcoin, right? To get 180% out of Bitcoin, it's got to go back up to $60,000. Solana just has to go back up to retest this range, right? And I'm not saying that's why Solana is a better investment than Bitcoin. I'm just saying if you pay attention to these support levels, there's like massive opportunities despite the fact that we're in a bear market. Massive opportunities. Okay, so Solana and CryptoStackers Pro underneath the green easy bands. If you believe in a cryptocurrency underneath the green easy bands, guys, that's when it's very, very oversold. Let's go to some margin pressure levels. Look at some of these lows. Again, our 1x short level. One of the reasons that I was so confident that $30 would be support was this 1x short level off of our last local high. Did we test below it? Did we get the bottom absolutely perfect? No, we didn't. But for the most part, like $29 is very close to the $26 bottom, right? We're starting to see some resistance here, right? If we used this previous local high, which you honestly wouldn't in real time, we do get closer to the 1x short level. But you can see that's where the buyers and the shorts had to start covering, starting to get squeezed, and buyers start coming in, right? Speaking of buyers coming in, let's look at our long levels off of our previous support. Again, this band of support between $26 and $29. That's where the support started coming in. Now we've actually pumped through our 2x long level, pumped through our green easy band level, and it looks like we may be finding some support on this 2x long, right? So if buyers start coming in on this 2x long level at around $39, that's very bullish in the short term. And we could definitely come back up and test some of these $58, $60 levels or even pump and get a really strong bounce up to $72. Now that's probably less likely that you would go straight to $72, but that'd probably be testing our 21-week simple moving average, which is starting to level out a little bit and could easily come down to the $72 region to be our mean reversion. Guys, remember, mean reversions are very, very common. We hit the green easy band 3 times, chopped in this area, and then what did we do? Bounced right back up to the 21-week simple moving average. We just did a perfect mean reversion in Solana. And how big of a pump was that? 87%. 87% pump just from a mean reversion. Right? So Solana, support still at $30. Still some support at $30, support here at $39, right? And if we break lower, if Bitcoin wants to go down to that 16.2K level, right? Where do we expect some support for Solana based off of this local high if we've put in a local high here? Well, more support in the $28 to $32 region, which is going to make it even harder to break through and go below. And we got that support at $21, right? So for me to purchase Solana again, I'm looking at, since I've already purchased this region around $28 to $30, I'd be wanting to load up at $21, right? So I'll average down my position again if we drop to this $21 support that we see is very strong support, not only in terms of margin pressure levels, but just structural support over here, right? So for me, my next buy levels, to recap, for Bitcoin, 16.2K. Now, I'm not personally looking to buy Bitcoin at 16.2K, but I'm looking at that as a trigger to go altcoin shopping, right? And no, I'm not looking at like these super low cap altcoins. I'm looking at Solana. I'm looking at Avax. I'm looking at Ethereum, okay? 16.2K Bitcoin, 10 to 12, maybe even $14 Avax, and $21 to $22 Solana, even though we do have plenty of support around $28 to $32. And if you haven't bought this $28 to $32 region yet, if we come back down to it, that could be a good entry point. If we come back down to test this, we could easily put in a little double bottom down here or a higher low, which would be bullish. Okay, what's next? Ethereum. This a second to load up. Looking at the chat here. Hey, Forrest, are you still a big Nano believer? Yeah, I still hold Nano. I have a large position in Nano. Do I expect it to just blow up at any second? No, not necessarily. It's a long-term play. It's exposure to like cryptocurrency. So I haven't put this Twitter thread out yet. I'm currently writing it. It'll probably also be in a newsletter. So if you haven't signed up for the newsletter, go to newsletter.cryptostackers.pro. I think I have a link in the description. But listen, I don't think you need very many cryptocurrencies to be exposed to the entire space. I just don't. I think that the more cryptocurrencies that you are in, the higher risk you're. I think it's actually doing the opposite of what most people think diversification does, right? And I think it's doing the opposite in terms of your risk profile, because a lot of these assets are correlated, and you're introducing different types of risk when you start going down the ladder here in terms of low caps, right? And you think like, oh, hey, yeah. Let's find one. Aave. I want some Aave. Well, here's the thing. If Ethereum does well, Aave is going to do well. Pretty correlated. But if Ethereum does bad, Aave is going to do bad. So you might as well just own Ethereum. Now, in terms of, market cap, Aave is going to have more downside than Ethereum, but it's also potentially going to have more upside. But you're also introducing yourself to more risk, right? Because what if Ethereum as a protocol fails? What if the merge fails and Ethereum goes to zero? Well, everything built on top of Ethereum will also go to zero, right? Although Aave is, like cross-chain, it has some like other stuff, but that's introducing tons of risk to Aave as well. Because Aave is cross-chain, it's got implementations on Matic, it's got implementations on Avalanche. I don't think they're on Solana yet, but they're on multiple chains. So what if something goes wrong with one of those other chains? What if somebody from the Aave team turns out to be laundering money or some. And again, these seem like far-fetched things, but we've seen far crazier things happen in crypto, right? We just saw Terra Luna, top 10 cryptocurrency, like death spiral to zero. So nothing's out of the question here. What if Aave gets hacked, right? Meanwhile, Ethereum's doing fine. Aave gets hacked. Aave's getting crushed, or Maker, or OneEdge. Any of these lower cap, DApp tokens built on top of Ethereum. You're also introducing yourself to a totally different set of tokenomics. Ethereum has very, very solid supply side tokenomics and demand side tokenomics, especially once the merge happens, right? But then you're introducing yourself to a less solid set of tokenomics and more tokenomic inflation to some of these other protocols. My belief right now is that to be exposed to the innovation happening in crypto, you only need exposure to the big layer ones, the highest quality of which I believe to be Ethereum, Solana, and Avalanche. And I know people love Algorand and they love all these other stuff, but if you look at where people are actually being onboarded, for every person and every dollar being onboarded into Ethereum, it's very small for some of these other, for Algorand and other stuff, right? So all the money is being onboarded into Ethereum, Avalanche, Solana, and like Polygon. And yeah, you have Binance Smart Chain and Tron, but from a fundamental perspective, those are both pretty crappy, to be quite blunt. And from a tech perspective and fundamental perspective, the best are Ethereum, Avalanche, Solana, and Polygon. Phantom's okay, but it's just been getting hammered recently. A little bit too high risk in my opinion. Same thing with Waves. Not a fan of Kronos one bit. Not a fan of Crypto.com at all. Not a fan of Binance Smart Chain, and not a fan of Tron. I forget what the number is, but most of the TVL in Tron is Justin Sun's money, right? So Ethereum, Avalanche, and Solana, that's where it's all happening right now. That's where it's all happening. And yes, TVL's down a ton because we're in a bear market, but from a technical and fundamental perspective, these are the strongest chains, right? So I want to be exposed to the layer ones that are innovating and all the stuff being built on top of it. You don't necessarily need to have exposure to a blockchain gaming crypto, right? You don't need to go buy Axie Infinity, because if Axie Infinity does well, yeah, it may have absurd returns, but it also has a ton of downside. But if blockchain gaming as a whole does well, whatever layer one is dominating the blockchain gaming space, which will probably be Avalanche or Solana, or maybe even Polygon, they're probably going to do extremely well as a result. Now, will the gains be 200-300x? No, but 10, 20, 30x given a long enough time frame. So yeah, I think you really only need exposure to Ethereum, Avalanche, and Solana to get exposure to 90% of the use cases for crypto out there. There are a couple of specific use cases that you could warrant buying, like Chainlink, which would be a data oracle network, and Helium network, which is like a decentralized wireless network. Other than those two specific use cases, I can't really think of any that you don't get exposure to just through being exposed to the layer one, right? Like Curve, Balancer, DYDX. You can get exposure to all of those use cases just by being on Ethereum, Avalanche, or Solana. NFT, you really don't even have to own NFTs. If you just own Solana, you're getting exposure to the huge NFT space on top of it because people are having to buy Solana to go buy NFTs. That drives the price of Solana up. Same thing with Ethereum. Yeah, so that's my take. I think there's really, in my opinion, no reason to be owning like Saber or just all of these cryptocurrencies have terrible inflationary tokenomics. They're just going to go down because they're just like Serum. Just like a ridiculously low float and high fully diluted valuation, high inflation. There's just no reason to own those for like 99% of people. Okay. I think I was going over ETH. Underneath the green easy bands, guys, Ethereum underneath the green easy bands. This is a generational buying opportunity if you believe in Ethereum long term. This is crazy. I added my position down here. I've been averaging in since $2,500. And you may laugh at me because that initial $2,500 purchase or $2,400 purchase is down 50%. That's fine. Well, it's very different from being down 75%, right? And because I've been continuing to average in, heavily at $1,700, $1,800, all the way down $1,400, $1,500, right? We don't have to go that high for me to get back to break even. Very different situation from being up here and buying the tops, right? And I believe in Ethereum long-term, and I'm adding to my position. I'm not afraid of it going down to $300 because if it goes down to $300, I'll buy more, right? So let's do some Sunsa levels on some risk to reward levels on Ethereum. Let's see what we're getting here. Getting some resistance here at 1279, right? We have our support around 1700, our support around 2500, our resistance here twice at 32, 3300, and 3600, right? Our initial support down here. And we're getting a little bit of resistance here. Underneath $1,300, you're getting a 3-to-1 risk to reward ratio to buy Ethereum. That's an amazing risk to reward ratio. And that's why we're starting to see buyers come in underneath $1,300, right? But simultaneously, we're hitting our green bold easy band and our 3-to-1 risk reward ratio level at $1,300. So expect resistance. So it looks like a lot of cryptocurrencies, Bitcoin, Ethereum, Solana, Avalanche, all hitting resistance right now. The question is, where are buyers going to step in again? Are we going to put in a higher low, or are we going to put in a lower low? If we put in a lower low, that's a really good buying opportunity because stuff is already oversold. If we put in a higher low, right, that looks like confirmation that we may be going higher or consolidating a little bit, right? What I'd like to see is to put in some higher highs, right? Some higher lows and some higher highs and make some support on top of these support levels. Break through, make support on top of them, and then look to see the RSI move above 50, and then we've got a reversal on our hands. We can start calling, a bottom. There we go. That's a little bit better. So that's Ethereum, guys. I can't stress enough how much just doing. We've been online here we've been live streaming for an hour now, and we've gone through the entire legacy market and 4 cryptocurrencies at pretty decent depth. And it's not that difficult to do. It's really not that difficult if you have the right tools. So I can't stress enough how just even doing just 15 minutes, pick 3 cryptocurrencies, right? And if I wasn't stopping and explaining everything along the way, we could have done Bitcoin, Ethereum, Avax, and Solana, those 4 cryptocurrencies, in about 15 to 20 minutes. So spending, even if you're a long-term investor, right? And don't get caught in the trap of all right, you do a bunch of TA every day and then you make bad trades because you think you have a fix on the market. No, stick to your strategies. But just 15 to 20 minutes of technical analysis a day can keep the pour away, right? It can really help you understand and get a grasp on the market. And yeah, obviously, tune into other people's technical analysis, but also just doing your own technical analysis, whether it's through CryptoStackers Pro or TradingView or whatever you use, just get a grasp on the market, right? Throw on the easy bands on a cryptocurrency that you're invested in and just look at the big picture. Do I believe in this long-term or not? If I believe in this long-term, is now a good buying opportunity? Should I be panic selling? The answer to should you be panic selling is probably not right now. Right? And then, guys, remember how you feel right now in terms of being in a bear market. And when Ethereum and some of these other cryptocurrencies inevitably in the next several years, it could be in the next 3 months, but in the future move back up to their red easy band levels, right? I don't care how bad it looks right now. I don't care if we're going into quantitative tightening. We'll see these innovative cryptocurrencies go back up and challenge these red easy bands again. And within the next 3 years, almost certainly, right? In the midst of a bear market, Ethereum pumped over 300%, right? Pumped from $85 400% to $360, from its below its green easy band level to its red easy band level. And I'm going to show you exactly how long that took. $195 days to move 370%, 360%. 195, that's 6 months. That's 6 months To put that into perspective, let's just say this is the bottom. And we don't know yet if it's the bottom. So it's a strong chance it's the bottom. It's very oversold. Ethereum at $880, are you kidding me? That's so oversold. There's a strong chance this is the bottom, right? This is in June. What that would mean, what that would look like if what we saw in the last bear market were to be true of this bear market, that means in December, that means in December we'd be testing these resistance levels again. Post-merge, this is not that crazy. 23% pump from the bottom over the next 6 months and just moving straight up for the next 6 months. That's a distinct possibility. And nobody wants to talk about it. Everyone wants to talk about how Ethereum's going to $600 to $300, $700. They've got all these low targets. And while that is also a distinct possibility, right? While it is completely possible for Ethereum to go lower, people are counting out the possibility that the bottom is in and we're going to pump 300% like we did last bear market. Now, last bear market, to be fair, we did see a 94% decrease, right? And we were still, we weren't quantitative tightening. There's arguments to be made for both sides. But we also have the merge coming up, which is extremely bullish for the supply side tokenomics of Ethereum, right? So there's absolutely no reason why we can't move back into this range here. If we just look at, the trading range, Ethereum has spent most of its last 2 years in terms of price actions. And this is probably a deviation, right? And we're going to move back into this range over the next several years. This is where most of Ethereum's price action has been. Maybe we go and put it another low. Maybe we go all the way down to $300 before moving back up here. Well, if we go down to $300 and then we move back up to 3,000, that's a 10x. Right? Like if Ethereum moves to $300, I will get a 10x out of Ethereum. I just will. Like I believe it's going to go back up to $3,000, so I'll buy it at $300 and just lock in a 10x and just sit on it until it goes up to $3,000. But like to sit and not buy Ethereum right now because you're like so certain it's going to go down to $300, like I don't think that's a good plan. Don't think that's a good plan. All right, guys. Let me catch up with the chat here. Have I checked out this? Donna asking if I checked out the Solana phone. I haven't looked at any of the specs for it, but I think it's incredibly bullish for Solana. I think it's incredibly bullish from a brand awareness perspective. Like, one of the reasons that I think Bitcoin does so well is its brand awareness and the community behind it. You say the word crypto, people think immediately Bitcoin, especially non-crypto people. But everybody knows, has at least, they might not know what Bitcoin is or how it works, but they've heard the word before. And you say Bitcoin and they're like, oh, that's a cryptocurrency. Incredibly strong brand awareness. Now, here's the thing with Solana. Solana is a top 10 cryptocurrency, and within the crypto space, crypto people know what Solana is. They know it's a layer 1 network that's sometimes goes down, has experiences network downtime, but is also very fast and scalable, or at least that's the kind of the pitch. And that's the idea. That's the advantage that it has, competitive advantage, right? Largest tech YouTube channels. When Solana puts out this phone, whether it's a good phone or not, all of these tech channels are going to be doing a review on it because they do a review on every single phone that comes out. But especially they're going to be doing, the new cryptocurrency phone, Solana phone. That's such great content and different content that they're going to be frothing at the mouth to get their hands on a Solana phone and do a review of it because it's going to get tons of views. It's very interesting. 18 million subscribers, 14, and these subscriber numbers are actually out of date. They've gone up since then. I think like MKBHD is at like 15 million or 17 million or something. 14 million subscribers. Linus Tech Tips. Linus Tech Tips. That'd be a funny channel. Text tips. Like you get tips on how to text. Linus Tech Tips, 13.3 million subscribers. Mr. Who's the, you get the picture. Millions, like the reach of these YouTube channels are among the largest on the internet. Like very few people, like the only other niche of YouTubers that have this many subscribers is like Mr. Beast and Logan Paul. Logan Paul will probably be doing, he does crypto content, so he may even do a Solana phone review or talk about the Solana phone. Mr. Beast, who knows? Maybe. But these channels will definitely be doing reviews of the Solana phone. That's reaching tens of millions of tech people, many of which who are probably already into crypto, many of which who may not be into crypto. So will I get the Solana phone? I'm on iPhone right now. I'm on iOS. I enjoy iOS. Unless there's some like major advantage to having it. Probably not. I might get it. I think like Solana phone users will have like early opportunities to some of the stuff that's built on it. Who knows? Maybe honestly, I probably will, because we'll probably build a Disko FM app, DApp on top of it, for listening to music and earning Solana. So yeah, probably. But I really like iOS, so I'd love to see an iOS integration as well. I used to be an Android maxi, and now I'm kind of more iOS. So regardless, I think it's incredibly bullish for the brand awareness of Solana. And I think it's going to get the name Solana in a lot of people's heads. And a lot of people are going to know what Solana, a lot of people who don't know what Solana is and don't know what Avax is are then going to know what Solana is, but they're still not going to know what Avax is, right? So Solana will build a competitive advantage in terms of brand awareness. Even if the phone flops, even if it's a bad phone, it probably will be a bad phone. It's the first iteration. The iPhone 1 was terrible. Very different. The Amazon Fire Phone failed miserably. But is Amazon still around and kicking? Yeah. Did it kill their brand? No. iOS is filthy. Yeah, I've tried both iOS and Android, and I have a Mac now, and it's like, I don't know. I enjoy iPhone. Android's not bad. I was on Android for years. I'm not like super hardcore against one or for one, but guys, we're going to wrap up the stream here. Before I do, please check out cryptostackers.pro if you want to take your technical analysis to the next level, right? If you want to make technical analysis simple and easy, right, and take a very short period of time, learn how to use CryptoStackers Pro. You can probably gather how to use it just from this one live stream. It's very simple. There's a couple indicators in here, most important of which are the easy bands. Just show us when stuff is overbought or oversold, when it's a good low-risk buying opportunity, or when it's this is the crazy part about Ethereum. So I start looking at charts, and I just start going off. I was going to wrap up the stream, but I gotta make this point. Guys, people are like, oh, yeah, Ethereum is down. Let's go to ETH. People are like, Ethereum's down 85% from the all-time high. From it was down. Oh, this is Solana. Sorry, I gotta go to ETH. I thought I clicked on ETH. I was like, I don't think ETH is down 90%. ETH is down 82% from the all-time high, or currently down 75% from the all-time high. And all of a sudden, people are like, all right, let's go. Let's throw on the shorts. We'll catch you at $400. Like, this is not the time to throw on the shorts. Come on, guys. Like, come on. Like, you're looking for short opportunity. Like, looking for short opportunities down here. This overextended from this trend. This is not a trend continuation play. Now, if you short at $1,600 or $1,700, that's a valid short level. And valid trade. But if you're looking for shorts down here, like, come on, guys, come on. That's like looking, saying, oh, we're in this nice, we have this nice trend line going. I'm going to trade with the trend. I'm going to look for a long opportunity right here when we're this overextended against the trend line. And you could say, like, I'm going to look for a long opportunity here and be like, oh, yeah, in hindsight, I was right. Well, not if you use leverage, because you got wrecked on leverage. You got wrecked by a 36% drop, right? You got stopped out if you're looking for a long opportunity here. Now, if you just bought spot here and turned around and sold it up here, good job. You got a little bit lucky that we didn't crash back down to this trend line or back down to the green easy bands, and we were on a roll and we had a lot of momentum going. But looking for a short opportunity, like, guys, you want to look for a short opportunity, look for the opportunity there when our trend line breaks, right? When our trend line breaks, right, and then we crash and then we hold a resistance here or on a sunset level up here, right? And we have a break of our bearish flag here, bear flag. That's a valid place to short when we break this level. But shorting down here, like, come on, guys. Like, Ethereum's already down 75%. Right? Why are you looking for shorts? Right? You look for shorts elsewhere. All right, guys. With that, if you want to do fast, simple crypto technical analysis, check out cryptostackers.pro. There's a link in the description below. It's like $19 a month. Cut your Netflix. Cut your Netflix if you can't afford $19 a month. Guys, you want to invest in Crypto Stackers Pro? Like, look at this. Netflix. Come on. I'm joking here, obviously. Cut your Netflix. Like, you want to short Ethereum, but you won't cut your Netflix? You want to short Ethereum when it's down 75, 80%, but you don't want to cut your Netflix subscription when it's down 73% so you can go all in on Crypto Stackers Pro? Come on, guys. The least you can do is pile in, gang up and on Netflix when it's down 73%. Cut the Netflix bill. Join Crypto Stackers Pro. Jokes aside, guys, check out the link in the description below. If you want to whitelist for Disko Kittiez, you've got about 2 to 3 days, maybe even less, maybe a little more to do so. Go to disco.fm/custom. There's a link in the description below. Simply connect your Phantom wallet, design a Disko Kitty for the collection, and you will be able to apply for. You'll automatically be whitelisted. I need to get rid of this button. If you just design a Disko Kitty, you'll be whitelisted. It's a listen to earn project on Solana. So the whole premise is that you'll be able to listen at disco.fm. Listen to music, earn Solana if you own a Disko Kitty. Yeah, going to be minting very, very soon. Donna Harshaw, thank you so much for the super chat. Much appreciated. Greatly appreciated. Thank you for tuning in. With that, guys, I'm going to get you guys a little outro music. And it's the same as the intro. Thanks for tuning in, guys. Peace.
SWP audio capture, not registered.